Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in with Bitcoin, and the pattern that we've been watching multiple times is when we reach an equilibrium where we get higher lows and lower highs. This is the hourly chart, and it's common, very common, throughout all stocks and commodities. You'll see it time and time again. And a way that you can look for the break of that pattern is, number one, by drawing trend lines so you can get a visual representation of when that pattern were to break. So I hit the lower highs, make sure no hourly candlesticks are closing above my downtrend line. And this uptrend line has been playing out really nicely over the past few days. I drew that a while ago, and it's still holding. We bounced off of it again. So I'd bring that line up and watch those two converge, and you can see a clear bull break above that level occurred just a few hours ago. And if you want more further confirmation aside from that trend line, I look at the price action. So once we were really tight here before the break, I would be looking at this low, and that's down at 880, and then this little high up at 910. So a break of 910 and we break the lower high pattern, and a break of 880 and we would break the higher low pattern. So tightening range favoring the bulls, and again, very common for volume to just drop off, get tighter and tighter and tighter, and then the break is accompanied by a big spike in volume. So the bulls won that battle, and where does that put us on the daily time frame? You can see how it got smaller, 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 bull break, and now we're looking at the high of the original bounce attempt where we got up to 942, and as of right now we got up to 928, so still a little lower high there, but the bulls have done a nice job recovering and building support on the way up with those consolidation. So a bullish MACD cross on the daily, need to break 942 for the bulls to look really strong here. And the weekly time frame, we can see some of that strength. A little bit of lower wick last week. Now the bulls showing up, already breaking the high of last week. And we are looking for continuation. This is a great candlestick for the bulls. And when I say continuation, first what I mean is we're likely going to see an equilibrium. Just like we pointed out on the weekly time frame, now we have our high. Now our low of consolidation, I would absolutely expect to form a lower high and then pull back and form a higher low. And we'll see it again just on a different, longer term, more drawn out time frame. So that's what we're going to be looking for to happen. So if I were a bull playing this bounce, I would be looking to exit. If I were a short-term bull, that is, I would be looking to exit somewhat in the near future, perhaps in the mid to upper 900s before that $1,000 psychological level. And then watching it play out from there and waiting for a clear break. And then if we get a clear bull break, I would hop back in. So we'll keep an eye on it, but as of right now, bulls in control of the short term, 942 resistance. Thanks for watching. Have a great weekend.